What's going on, good people? Welcome back to another episode of Trading My Funded Account. Today is day number 28. It's November the 17th, 2023. We made some trades today, so let's get into it. So first and foremost, let's talk about the key levels that we have on the chart today. So we have yesterday's closing price right here at 35,015 at the purple line, and that played a major role in today's session. So let's go ahead and let's just look at what happened during the pre-market, so we can get a good idea of why the trading range that we're looking at right now began to form. So when we were in the pre-market, we actually had a very nice uptrend going all the way back to the beginning of the London session at around 3 o'clock. So you would think that, oh, okay, the market is moving up. We should continue that way and going into the New York session. But that was not the case. Around 8:30 this morning, an hour before the New York session opened, the downtrend ended once we established this lower high right here. And then from that point forward, it was just a series of lower lows and lower highs that brought prices all the way back down to yesterday's closing price, which was, if you remember that, 35,015. So once we reached that, the market opened not too long after that. And that's pretty much what brought us into the trades that we made today. So let's go ahead and talk about today's trading range. So let's go ahead and discuss trade number one. So at one right here, I went long here based on the series of higher lows from A through C. So I saw higher low number one, higher low number two, and then higher low number three. But the only thing about it is that trading the higher low right after yesterday's closing price gets hit decreases the chances of success. And that's something that I've been learning over time, because you would think that the higher low setup should work right here, because for right now, starting from 950, the trend was up. We had three higher lows. So you should say, oh, okay, we should come back, retest the next higher low, and then create a new high after that. But it's something about yesterday's closing price. When it gets hit, you kind of want to hesitate a little bit and just wait and see what prices are going to do after they hit it. A lot of times when I see my favorite setup after yesterday's closing price gets hit, it doesn't matter how lucrative that setup might be. It usually doesn't work, because sometimes the market can be a little bit erratic when yesterday's closing price comes back to get hit. Because you got to remember, the previous day's closing price matters to everybody that trades that chart. Even though I trade on the 1 minute, this level right here matters for people on the 5, the 15, the hourly, the 4 hour, the daily, and not the weekly, because the weekly is the weekly, but all the way up to the daily chart. You have every time frame up under that all looking at the same levels. So we might get a bigger reaction than a level that will usually get tested just only on a 1 minute chart, because that level only works for a certain amount of people that are looking at a certain type of time period. So yesterday's closing price is very important and is very volatile a lot of the time. So one of the things I've learned, and one of the biggest lessons I've learned, is that you just kind of want to avoid taking any trades after yesterday's closing price gets hit. Now you can trade up into that level or down into that level based on which way the market is going. But once it gets there, you need to get out and then just wait and see what the market wants to do going forward from right there. So it's one of the biggest lessons I learned on trade one. So then we come back on trade two, and this right here, I would say this was just a bad trade, because I repeated trade one as prices reclaimed the prior higher low. Now this is a variation of the higher low that I need to avoid until I do more research on how this works. And this was one of my biggest topics that I talked about on my video from the other day, when I was saying how, when I talked about my plan for drawdown and how to get out of it, one of those bullet points was avoiding the trade when I'm trying to trade the reclamation of the higher low, meaning that the higher low had already got broken through right here at C, right? We broke down to this wick right here. Now, once we were on the way back up, I saw this long tail candle wick, and then I saw a large green candle pushing back above support. So I said, oh, okay, cool. The momentum is coming back in. But this right here is me buying towards the highs of the swing. If anything, I need to buy towards the support level at B right here, and not trying to buy as prices get back above C. Because then in that scenario, I'm aiming for prices to break out, meaning that I want them to break out past that prior level of support that had just been broken through. I myself am not a breakout trader, so that means I need to avoid all of the types of entries that will put me in a breakout ready position, a breakout ready type of position. So, you know, that just comes back to really just having more control and more discipline of my emotions, because once I saw that long tail candle wick and then that large candle to the upside, I pretty much ignored all of the rules that I had in the back of my head, and I said, ooh, I gotta go long. But that's not the case. You got to be disciplined on every trade that you take, or else you could expose yourself to the possibilities of losses like I took right here on trade 2. And this right here, trade 2, also goes back to me talking about not getting into the same trade once it didn't work before. If I'm getting in from the same price at the same levels in the same market scenario, more than likely I'll probably get the same results. So that's just reinforcement of that lesson that I was talking about a few days earlier. And you know what? I learned my lesson, and that's something that I need to work on and get better on. Just if the trade doesn't work at first, hey, if you don't get a better setup down the line, let it go. If you get the same setup, you can't take it. And that's something I got to remember. So that brings us on to trade number 3. So right here, okay, this is trade 3 right here. So I shorted here after seeing prices hit Y.C.P, yesterday's closing price, at D right here. So we hit Y.C.P, and then we formed 2 lower highs at E right here, and then at F right here. Now this was a good idea, but I have to remember to take the first entry at F and not the second entry. And that right there is another one of my biggest rules, which is when you have a setup, you get in at the first opportunity that you can get in, and then anything after that, you just avoid it, because the second move is just not as lucrative. And that's because, and especially in a day like this when it's a range, nobody is really expecting too much continuation. People are just trading from level to level. So once prices go from one level, which was the retest of this prior higher low once it got broken through. So look at this higher low at B, and then draw a support level. Well, let's go back on the chart real quick. So if we take, oh wow, it's bunched up. Dang. Okay, let's stretch that out a little bit. All right, now we can see. All right, so if we take the higher low right here from B, and then we draw a level of support across the body, and then a level of support across the wicks, I was pretty much shorting right here, expecting for prices to come all the way back down. So like I was saying, you want to make sure that, wait, hold on. Oh, technical difficulties. All right, hold on, let's get focused. Dang, okay, I lost my train of thought. What was I saying? Back to the screenshot. Okay, so you take the first short level, you take the first short from the support level at B once it comes back and retests. So that happened right here at F, and then prices went from that level back down to the next level below, and then the move was over. So you got to think about what all of the traders right here are doing. Since it's a trading range type of market, you should not expect too much continuation, which means that you should expect prices to move from level to level. So with that in mind, when you see prices go from one level to the next, you got to look at what price action is doing. Price action formed 1, 2, 3, 4, 5, 6 wicks in a row. Really, you can say 7. 7 out of 10 candles down here all had wicks, which is telling us that it's buying momentum down here. When you add in the fact that we already had a higher low from this level that already got retested once, showing us that the level of support was strong, and then we see 7 wicks down here as it comes back to this level, that's just telling us that it's demand down here, which means that more than likely prices will have some type of bounce. You never know how far the bounce can go, but you know that it'll be some type of bounce. So that's why you really don't want to take the second entry, because once the move already happened, the move is done. You're trying to get back in on the second attempt, but the second attempt is not as lucrative because everybody that's shorted from right here at F, if they're not taking profits down here at the bottom of the zone, they're taking profits on the way up as they see their trade start to decrease in the amount of money that they have. So they're like, okay, let me just lock in something. So you don't have a lot of people going short right here. You have a lot of people going long because everybody that was short is covering their position. In order to cover a short position, you got to buy it back. And then you add that into the fact that you probably have a lot of people going long based off of the fact that this is a higher low that already got retested. So we know it's strong. So people are going long down here. So that right there gives you 2 groups of buyers, people that are covering their shorts and people that are entering new long positions. And that just leads to a move like what we saw on candle 3 when I got in, where we saw this long tail candle wick with a large body that moved all the way to the upside over the next 2 candles. So all of those things together is what led to me having to take that loss right there. And that's why it's so important to take the first entry and not the second one. Because if I take that first entry at F I can take prices from the break of this price support level at B and then just take it all the way back to the zone at A. Simple. So that's something that's really important. And trades like that just come down to detail. You got to remember all of your rules and you got to follow them no matter what the scenario might be. So let's go ahead and talk about trade 4. So trade 4, where is that? That's right here. So notice how after we touched the top of the range right here at 35,015, which also was yesterday's closing price, we moved back down, established a higher low, but then came back and made a lower high right here. So once we made the lower high, we came back, made a second lower high. So we have 2 lower highs in a row. Well, really, it's 3 because this was the first one. This is the second one. And then this is the third one. And then we shot all the way back down to the bottom of the zone. Now, what I've learned over time is that a higher low formed directly below a zone increases the chances of prices moving back up into that zone. And that's why I went long right here. Because usually when it comes to a zone, I don't want to just go long because prices are coming back into the support level or the bottom of the range. I want to make sure that, yeah, prices come back to support, but I also want to see my setup form so that I have a little bit more confidence in taking that trade and I have a real legit reason as to why I'm getting in. So once I saw that higher low right here at G, I said, all right, cool. If I get prices to come back and retest that support level from the bottom of the zone, I'm going long. So then I come back on trade 5 and I added to my trade from trade 4 when prices came back to retest the zone successfully. So I initially got in right here at 4. Prices moved up, came back, retested the top of the zone. And then once they got back above the zone, I took that all the way back up to what used to be a major level of resistance up here at 35,000. And that's where I got out, pretty much at the top of the range. Now, one thing I want to talk about is how you can have different ranges depending on the size of the range. It can be smaller ranges inside of a bigger range. So the bigger range today stretched from 35,015 at yesterday's closing price all the way down to 34,900 and let's call it 55 right here at the blue line. So that was the overall big picture range. But within that range, we had a smaller range between 35,015 and then 34,980. Then we also had another range between what's this? 34,970 and 35,000. And then after that, we kind of see the range start to respect the extremes for the bigger picture range, which was 950 back up to 35,015. So we went from 950 back to 15. So inside of a bigger range, you can have a smaller range, and you got to be able to recognize the differences between those bigger ranges and smaller ranges, because if you went long right here and you were expecting for prices to come all the way back up to Y.C.P, it would be a hard bargain, because you would have had to wait for at least another hour and had to sit through a whole lot of drawdown if you had a wide stop. Me trading with a tight stop, I would have gotten stopped out as prices came back and broke past the zone right here. So that's why it's always important to be able to distinguish the difference between what is the most recent level of resistance that maybe you should get out from compared to what the major levels of resistance are that define what the overall trading range might be. So that's something to always keep in mind when you're in a zone. You know, it's like I said yesterday, a zone will usually never be perfect, but it'll be tradable as long as you can understand what exactly you're looking at. So that's important to remember. So that was trade 4 and that was trade 5. Got out right here towards the top of resistance. So then I pretty much just waited. I see prices come back and retest the zone multiple times, but I never really got the higher low setup that I was looking for with a retest behind it. So I never got in until we came all the way back to trade 6 right here. So notice how once we established resistance up here, we weren't able to break past this level. Then we finally sold off, made a lower high, broke past, or at least tried to break past the bottom of the trading range. But really all we came back to do was test this one wick that was the extreme low level of the zone. Once we came back and retested that, prices did nothing except for move back up all the way back up to the top of the range. And when they were doing that, when they were in the process of moving back up, they formed a higher low at H, came back, retested it, moved up, formed a higher low at I, came back, retested it, moved up and formed a higher low at J. We never came back to retest that one, but we did come back to retest the bottom of the zone, which in this case was good enough, because you might expect prices to come back and retest that higher low from J, But when you look at the fact that we touched the bottom of the range extreme, and then we had one higher low retest, two higher low retests, and then we had the zone up here, it's like, okay, you could look out for J. So if you want to be aggressive, you could put an order at J, or you could put an order, well, not, you could put an order at J and put an order at K, and then you would be able to take a more aggressive position right there. But I said, look, I could hold out for J, but it makes more sense to get in at the bottom of the range because this has been a level of support throughout the entire session. It already worked for me on trades 4 and 5 once this higher low got formed at G. So more than likely, this would probably be the level where the higher low gets formed at. So let me go long right here in anticipation. Now, yesterday I talked about not anticipating the trade and being more so on the reactive side instead of the proactive side. But when it comes to trading, man, sometimes you do one thing and then sometimes you just don't. So you got to be able to understand the context of the market in order to decide, should I anticipate or should I react? So you got to understand what you're looking at and understand the market that you're trading in when you're making that decision. So overall, I just decided, you know what, I'm going to accept the risk and I'm going to go long right here at 6 at the bottom of the zone. But if you're willing to take a trade like that where you're more so taking you're anticipating the move rather than reacting to it, you just want to make sure that you keep a very tight stop. So as soon as you see that trade going against you and it's not working for you, you get out of it. So I was ready. I was on the button. I was ready to click the sell button if this trade started to go against me too much, but it never really did that. It poked past the zone a little bit and then came right back into it. So I took it all the way back up to around the same level that I got out from at 4 and 5. So I pretty much just repeated that same trade that I took at 4 and 5 and took prices back up to the top of the resistance zone that I was looking at from before. So overall, I would say 6 was a decent trade, but I think it's improvements to be made because one thing I talked about yesterday and the day before that was that when you're in a trading range, this is the one opportunity where I feel very confident about expanding my profit targets. Usually I come in and I try and get my 20 to 25 point scalp target and then I'm done. I don't care what the market does after. I don't care what it does later. I'm just here for the move right now. Normally in a trending market, that's what I would do. But when it's in a range bound market, more than likely, if prices have already hit the bottom of the range and they're making higher lows on their way back up, they're probably not going to stop moving to the upside until they get back to the top of the range. So in this scenario, I could have possibly held this trade all the way back up to the extremes of the range at yesterday's closing price at 35,015, and I probably would have been able to make another 20 to 25 points off of that trade. So that's something that I need to remember. And I could have also added to trade number 6 right here when we formed this higher low, especially if I was already in the position, because not only is this a higher low, but it's also a retest of a previous swing high that we just established, which when you're in an uptrend, all of these signals, a previous retest of a swing high followed by a higher low, both of those together really give you like the double green light to go ahead and get into a position, a long position, if you weren't already in, or add to your long position if you already had a position open. So that's the improvements that I can make on trade 6. But I would say overall today, I'm happy with what I did. I'm still trying to get through drawdown. So I just want to lock in the trades that are there for me when they make sense. So I feel like I did that on trade 6, but it's always room for improvement. And that's what I want to make sure I keep on the back of my mind and the back of my head. So that's pretty much the last trade that I took today. And overall for the week, man, I'm proud of my performance because these past 2 weeks, I kind of been getting my butt whooped a little bit, but not because my trading plan didn't work. It's just because I came in and didn't execute my trading plan the right way. So this week was really eye-opening for me, and it was a big confidence booster because it taught me that if I come in and trade my plan the way that it's supposed to be traded and follow all of my rules, the sky is the limit. I only go wrong when I start deviating from that plan. And this week was just more reinforcement about why that's the truth. So what I need to do is really lock down this weekend and really get into these charts and study and study and study some more until I can really get a good understanding of why my trading plan works. And then that can help build my confidence when I'm trading next week, because I'm like, okay, I understand that my trading plan works. I know why it works. So let me just go ahead and follow it. And I also need to understand that anytime I deviate from this plan, the chances of success decrease drastically. So that's the biggest lesson that I need to take into this weekend. Just focus on continuing to make improvements to your trading plan and focusing on building up your discipline and building up your patience. And I think if I focus on all of those things this weekend, I should be able to come back on Monday and have a great week next week. So that's all I got for you guys today. I hope you learned a little bit more about how to trade trading ranges, especially when it comes to defining what the bigger trading range is and then what the smaller trading ranges would be in between and inside of that bigger range. I'll be back on Monday, November the 20th, ready to run it back again with you guys. But until then, study hard, have a good one, and take it easy.